My name is Cyrus Patel. I live in Mississauga. I'm also a business owner. I own multiple retail outlets in Mississauga. I'm a trainer with the organization that I'm with. I've been with them now for over 15 years. And I do a lot of work as far as mentoring and training and bringing on new people into our business. Mutual funds invested with the bank. I had GICs. I had finance that were being looked after by like a finance manager or account manager, and all of them were just basically RRSP type investments that were hopefully going to increase in value during a certain period of time. I was dissatisfied because in the initial introduction to them, when you went and sat down with the bank or with the finance manager, etc., they gave you a lot of information about them and so on. You parked the money, and then it was like there was very little, if any, more communication. There was a dwindling amount of return on what I had. You could see accounting fees or annual fees, service charges, etc., that were applied towards the investments, but very little return and very little communication back and forth as to what's going on or if there's any other avenues. It was like out of sight, out of mind, unfortunately, with the financial institutions. In a lot of cases, it was disgruntling to find out what the state of the investment was in. I had a friend, Ron, who was involved with syndicated mortgages, and he described to me briefly what it was all about, and actually invited me to one of his seminars, where I got a lot more information about how it works, how much is involved. A lot of questions and answers were provided during that seminar. He introduced to the people who are actually involved with the nuts and bolts, which gives you a very good feeling versus previously, where you're basically writing a check to a bank or a financial institution, and the money is then gone into some kind of portfolio that you may not ever find out what they're doing or what your money is up to. I came out with a much better understanding of how it works and how quick you get a return back on your initial investment. They advise you that you have to get independent legal advice. So the money that you are investing, you completely have a full idea of where it's going, what the obligations are, what the syndicated mortgages obligations are, and so on. So you have a clear and concise and independent advice that's given to you prior to going into something like this. What I like about it is that I can see it, I know where it is, or I know where the money is being invested in, whether it's a building project or a retail project, wherever in Southern Ontario, for example. And you get a feeling that you can see the money being used towards whatever opportunity that you are investing it in. This here, like I said, you can see the bricks and mortar. You can see the actual development. You can see it maturing. There's a period of possibly 36 or 48 months in which you will get your return on your investment and possibly take that capital and put it somewhere else. I find it to be a short-term opportunity where you can see where your money is going and then move it around once that project is over and another project is going to start. I would highly recommend it to other people. I think it's a good vehicle to be able to park your money in for a short period of time, see it mature, move it around to another opportunity in a few years' time, etc. And again, possibly even invest some of that return into a purchase or an investment off the project that you had actually invested syndicated mortgage in. So I would highly recommend this. I wouldn't call it, and I don't believe in a get rich quick, but it's something where it's safe, secure, and you have a reasonable return versus what you would get at your local bank.